Hey guys, welcome back to another episode of Trades Talk. I am your host today, Justin White, and I am interviewing Jason and Tony Batallan with Property Works out of Florida. These guys do facility maintenance and they do it well. They do everything from landscapes to light bulbs, and they have grown their business rapidly over the last 15 years to where they sit today. They've done over 12 acquisitions, although that's not the core of their growth. Most of their growth has come organically, and they share some of those strategies and techniques they've used to get to where they are today. This is a action-packed episode with a ton of great takeaways. Make sure to keep a notebook handy. As always, dive in, enjoy, give us your feedback. Don't forget to subscribe and like. We're back with another episode of Trade Talk, and today we have Antonio and Jason Batallan on the podcast. So we'll start with Antonio. Antonio, welcome to the show. If you could, just give us a quick background of how you got started in the trades industry and what kind of led you into the place we're here today.
Well, thank you, Justin. Thanks for having us on. Jason and I are brothers. We come from a real estate background. Some time ago, we struggled to find contractors that would actually show up and do what they said they were going to do for a reasonable price. So when, 2009, 10, things slowed down a bit, we went out and acquired a company, a commercial landscape company, actually, instilled the disciplines that we use every day, systems, processes, and within a short period of time, grew exponentially, did it again and again and again, included janitorial companies, paint companies, number of different things. And that put us where we are today.
That's awesome. Jason, what was some of what was your mindset going in? I mean, look, I worked with my brother. I still work with my brother. When you guys came together to decide to go into business and buy this landscape company, what was kind of going through your head at that point?
We have always worked together since we were young, and we were already working together at the time in the real estate field as in multifamily commercial and multifamily residential real estate. So we were already working together for quite some time. Like Tony said, we started to look at, ancillary things to what we were currently doing. And one of those that was easily attainable was a smaller commercial lawn landscape company. We were already paying for those services at our A properties. So our first step was we started doing that for ourselves. We bolted on this company that we bought, this small company, started doing it for other people. And that took off, like Tony said, and we just started, putting structure to it and knew that we needed to grow it rapidly for it to be worth our time and energy and resources, et cetera.
Yeah, I mean, you guys are coming from a large real estate portfolio, entering into the landscape industry. What was the transition like? I've heard from a lot of people who are outside the industry coming in, the level of professionalism, the level of business acumen in the trades industry coming in is sometimes a little bit lower, right? A lot of the guys kind of start from a pickup and a lawnmower or work their way up. Did you guys experience that coming in? And if so, how did you guys kind of navigate the waters coming into the trades industry from real estate?
Sure. I mean, more often than not, the smaller size lawn and landscape companies in our area are good people that started a small business. They did what they said they were going to do. When they said they were going to do it, they've grown this business. But oftentimes, a lot of their business skills and certain ways they're doing things are not necessarily, the best means and methods of doing things. And oftentimes, they're the end all be all to everything, running an office out of their pickup truck and spread very thin, not necessarily used to a lot of procedures and systems and stuff. So, yeah, I mean, that was exactly our experience. We saw that we could implement those very rapidly. And, like everything, with some change, there's a little bit of friction sometimes, but most people like to have organization and those systems in place. And frankly, the people that don't like that, you don't want on your team anyway. Most everybody got down to it, fairly quickly and, like that, and like having clean trucks and newer vehicles and things that work and, the proper footage to the proper job, et cetera, and a real schedule, that type of stuff.
Yeah, and I got to imagine that's both from the employee side and the customer side, right?
Correct.
How much of that was your guys' growth? How much of the growth was attributed to the systems, the nice trucks, the cleanliness you guys presented? How much of that contributed to the growth? And maybe what are the other drivers that you guys found to grow the company?
Probably 90% of it.
Wow.
A large amount had to do with that. How do we, because this is an industry it's the entry point, Justin, is very easy. Anybody can go cut grass, right? And I, like yourself, we can't compete with certain vendors. So what is it that makes you different? And I asked myself this question even today, right? And I would challenge people to ask yourselves the same thing. Is what I'm doing in my business day to day in line with where I want to go? Is it? It doesn't matter if you have the answers or not. The question is, do you feel that what you're doing day to day is in line with where you want to go? And this goes for kids, wives, financial resource, anything, right?
Yep.
And if the answer is no, then what are you doing about it, right? Who are you searching for? Where are you getting information? What are you doing different? Because we can't do the same thing over and over again and expect different results. That's the definition of insanity. And ask your employees this question, right? Oftentimes, as owners, we're afraid to ask our employees what they like and what they don't like in lieu of what they'll tell us, right? That could be your best thing. Like, there's nothing wrong with having a meeting and saying, hey, I want you guys to come up with the 3 things you like the most about working here and the 3 things you don't like. And if you were me and you had an open checkbook, what would you do? Doesn't mean you got to go run out and do it, but at least you're allowing these people to voice their opinion, 1. 2, and they're giving you a view from the other side of the fence that oftentimes you don't get to see.
Right.
So I think the ability to do that, listen to them, if it makes sense, do it and say thank you. Say, hey, man, you mentioned this and we've done it. And man, it really made a difference. I appreciate your input on that. That type of thing, and constantly forcing yourself to grow and get better, I think defines everything, right? How can I do it better, more efficiently? And by the way, that goes with clients too. There's nothing wrong with going to see your client and saying, hey, Mr. Smith, can you be honest and level with me? What's going on? What do you like most about us, and what do you hate the most, right? If you could design your ideal vendor, who would they be and what would they look like? Those are the 2-3 things that I think made the biggest difference for us. We brought in advisors, we listened to tapes, and maybe lastly, as an owner/entrepreneur, become a habitual learner, studier, reader, right? Search to get better. The answers are always in the mirror.
Yeah.
Success is never a destination. It is simply what you attract by the person you become. These aren't my lines. I wish they were. Maybe if they were, I didn't hear. But I think about them all the time, and I tell myself them all the time.
So you make great points there. And working backwards to what you said was lifelong learner. That's such a great piece of advice. And I've embraced that about 10 years ago. And that's when we started growing, is when I started to realize, and at 25 years old, right, I thought I had all the answers. I was like, I got this thing figured out. But the more you learn, the more you realize you don't know and how much more there is to know. Asking clients and employees, I think people are just afraid to ask their clients and employees because they know what they're going to say and they're afraid of having to change. But firstly, what you said is what I'm doing in line with where I want to go. Us 3 talked quite a while over in Orlando a couple of weeks ago, and that was a core part of what we were talking about, which is the vision. And so many people lack the vision of where they want to go. So when you ask them that question, is what you're doing in line with where you want to go? I think a lot of people will answer, I don't know where I'm going, or I don't know where I want to go. So Jason, I'd love to get your take on this. How much of this for you guys, and maybe let's start here and then you can answer this question, is where did you guys, obviously you bought a company in the late 2010s or 2009, what have you. And then today, where are you guys at in terms of size? Maybe just give the audience a little bit of that. I know where you guys are at, but maybe if you could talk to that. And then secondly, speak a little bit to that growth that you guys had.
This year, top line revenues will be roughly 35 million. We intend on being at 50 within 18 to 24 months and 100 within 60. That being said, that this has all been very intentional, right? And I think that's a great word that I always have, in my mind, because things don't just happen. They happen just for the most part. And you have to know the direction you're going, even if it's not, completely pinpoint accurate. You have to know in which direction you're going and why you're doing things in a certain manner. If you intend at staying at a, $250,000 a year organization, then there are certain things you don't need to do. But, you should know that that's where you intend on staying and pick your employees and your customers, in accordance with that. That's been a big key for us because as you kind of alluded to earlier, certain decisions and certain changes are difficult. And a lot of people don't ask their employees or their customers these questions because they know what the answers are, but they're not willing to do those, to make those changes in order to accommodate both sides. And if you don't accommodate both sides, you're not going to be in business for very long or have a very successful business. When you know why you have to make those changes and why you are making that makes it a lot easier.
35 million today. Congratulations on that, by the way. That's a huge accomplishment. And we haven't talked too much about your guys' offering, but I know you do more than landscaping. So as of today, what does that family of companies, or however you guys want to describe that, what's that portfolio look like today as far as the services you all offer?
So we focus on commercial maintenance, Justin, from light bulbs to landscaping and everything in between. From porter services to pressure cleaning, painting, street sweeping, landscape irrigation. We're not contractors. We don't build things. We just maintain them, right? As far as industries, sporting events, down here in South Florida, in particular, we have a lot of spring training facilities for baseball, Major League Baseball, car dealerships, educational facilities, roadways, parks, municipalities. Those are some.
Yeah. So you guys are spread between private and public works,
correct,
and then also between landscaping and the other janitorial type management and maintenance sectors. A lot of people will say, and I get this advice from the business coaches, right, is just do one thing really well, whether it's landscaping or janitorial, just focus on one thing. And I think there's a lot of value in diversity and offering different services. What's your guys' take on that? What has been the driving force to offer such a wide range of services?
So we do one thing very well, maintenance. That's what we do. So we don't do everything ourselves. Here's what happens in our world. Let's say you have a building or two or three. We're your point of contact, right? We are an extension of your facilities personnel, so to speak. Doesn't mean that we're going to do every job, but we could oversee, manage, assist in the execution of these jobs, right? Oftentimes, even in landscaping, right? Somebody will say, hey, let's get some pricing to do the landscaping. Nobody creates a clear scope of work. Two different people met with the vendors that came to show them the job. So they're bidding on two different things. The customer's inclined to go with low bid for obvious reasons. And then once the people get there, they didn't get what they wanted. The client is unhappy. The vendor, gave it his best shot. It's just screwed up. So who's managing that for a commercial facility, right? We play that part. Aside from that, we also do some of the work, to your point, but we don't do all the work. And I agree with that statement that stick to one thing and be great at it. We do, and it's maintenance.
Well, I love that answer. And I think a lot of people say we do landscaping really well, but then they'll go and they'll do work at a residential house, install, and then they'll go maintain the pests and the fertilizer on the lawn, and then they'll do commercial. And it's like working in three different worlds.
Yeah, so we don't do that. We don't do any residential, right? It is strictly commercial. And for many of those industries that you just spoke about, right, whether it's pest control or fertilization, HVAC, we have strategic partnerships throughout markets, right? People that's their lane that we work in conjunction with.
And do you feel the real estate background that you both have enables you to walk into both worlds and speak the language. You can go and walk into a property manager or a building owner, and you could go meet with the HVAC team, and you guys can kind of straddle that fence, if you will.
I don't know what Jason feels, but I think it helps definitely.
Absolutely. Yeah. Okay. Well, I want to move over to this idea of acquisitions. It sounds like you guys started the business with an acquisition. Is that correct?
Yeah.
And have you continued to do acquisitions since?
We've done 12 so far.
Nice.
Organic growth is difficult. It's expensive and it takes time. Business acquisitions, although it's complex and you have to do your homework, it puts the company's growth on steroids, for lack of a better term. It allows you to buy time. We can go in and acquire 30 years of someone's market research, their client relationships, et cetera, in one sale, where it would take obviously years to be able for us to do the same thing. I think that's extremely beneficial, and that's helped us tremendously.
Besides that, we have had a significant amount of organic growth. I would say to that top line number we gave you, I mean, more than half of that has been organic growth. Probably closer to the 60% number has been organic growth. But, to Tony's point, in a way, you're buying time. Another thing he didn't touch on there is that you're also buying, in a lot of cases, some qualified employees, which is a huge plus. Any of these organizations that we've acquired, one of the most important things for us is to try to retain all of their employees. There's always room for great employees, as you know. It's pretty interesting to me that oftentimes a seller, that's one of their first questions, which is very interesting because without the employees, you don't have a company, right? But more often than not, one of their first handful of questions is, do you guys plan on keeping everyone here, or are you going to get rid of people? And we're like, it's kind of a no-brainer. Like, why would we want different people that are already doing this? So all we bring to the table is resources and systems and processes in order to allow those people, to flourish even more than they already have. So that's a big component of that. And some people, I would be lying to you if I told you that it's 100% retention of employees. Some people do not, adapt to a little bit of change well, and that's okay. It's our prerogative, and they don't have to stick around. But more often than not, most people do, and they like what we're bringing to the table. Everybody likes to see the organization that they're working at do better and change in a positive way, et cetera.
What are some of the tactics or tools or strategies that you guys put in place to retain employees? So I know that's a massive challenge for any acquiring business, is to keep the key employees.
The first thing that comes to mind to me when you ask that question is clarity and transparency. We are very transparent with our employees. We let them see what they need to see, and frankly, sometimes a little bit beyond that. So it's a lot easier for everybody to head in the same direction when everybody understands the goal very clearly and what we're doing and why we're doing it. Some of these things may seem a little tedious or a little bit of overkill in certain areas. This is the reason we're doing it. And this is how it will benefit you in your position, not only monetarily, but with your own personal development and your learning. You're taking this with you, whether you stay here or not. I think that helps tremendously with our employees.
Yeah, it's such a simple answer too. I mean, clarity and transparency, it doesn't cost a whole lot of money to provide those two things. Tony, I want to jump back to you. 12 acquisitions, I'm sure you've looked at a whole lot more businesses than just 12. How do you guys go to screening and selecting that ultimate partner that you're going to purchase and partner with?
It's like you're dating someone. When you get to know them, you talk about things. Hey, how are you going to react to this? How are we going to deal with that? And all the conversations are not good, but ultimately it has to do with your ability to get along with that person, because unfortunately shit happens. It does. I mean, things don't always go as planned, and your ability to sit and talk and understand each other is where, that facilitates the whole deal. You got to go with your gut a lot of times. Guy told me once years ago, if you want to be a deal bad enough, you'll do a bad deal. Get ahead of yourself. It's got to make sense. It's got to be win-win. If you win, they lose, that's not going to last long, because when you need them, they won't be there. They win, you lose, that's not going to work either. So both people have to win. And one thing I wanted to say, Justin, and respect to the employees and the culture and how you keep people. I'm a big analogy guy because that's how things relate. How many times do you get on a plane or on a cruise or anywhere for that matter? You don't know the pilot or the captain or who's taking you there. You can't see where you're going, but yet you trust this person to take you to that place, right?
Yeah.
If you think about things that way and you believe in the core principles of the organizations, people will allow you to lead them. Now, you got to be transparent. You got to explain to them what qualifies you to do this, and you got to create a track record. You can't say one thing one day and not do it the next day and promise something that you're not going to fulfill on. But if you do that, it starts to become easier because people begin to trust you and trust your leadership and know that we're going to get there. It may take a little longer. We may have some mid-course corrections, but we're going to get to this destination that we constantly look at and talk about. I think that's been instrumental for us.
Yeah, I'd agree 100% with that. And I love the analogy because you're so right. We get into these planes and into these, whatever you call it, trains, buses, whatever, and we're signing up to go the distance. It's not like you're halfway to New York from California saying, hey, I'm going to jump out of this. I'm completely into Texas. It's like you're signing up to go to the distance. And Jason, you shared with us a really nice 5-year trajectory of where you guys are headed. I have complete confidence you're going to get there. The next question I have is, how do you structure some of these deals? And feel free to give as little information or as much information here as you guys would like. But I think I'm always interested, and I know others are, and this is honestly, my perspective as a business owner, coming from a business owner, and let's say I was thinking about selling our business, what does the structure look like? I mean, are you paying paying the business owner on day one? Is there a cash part and then an earnout or a seller note? I mean, kind of walk me through a little bit of how you guys structure this. And maybe there's someone listening to this podcast, he's a $10 million business and they're thinking about selling. And what do you guys kind of offer in that way? And how do you approach deals?
From the seller's perspective, that's all going to be determined by the size, your enterprise size, right? The size of your business is going to determine who your potential buyer is. In our case, we've done, I wouldn't say every type of transaction, but a multitude of transactions structured in many different ways because we've purchased different size entities, right? It really depends on the size of the company, what that seller is looking to do, after, post-close. If he really wants to hang out for a while, if he really wants to be a part of this growth and of seeing that company go to the next level, if they're just altogether done, some people are frankly done. They're ready to, sail off into the sunset and do their things, and that's okay as well. It really depends on those things. The company that you're acquiring or selling and what that owner has in mind. That's basically it. And everything you mentioned before, from an earnout to a seller's note to financial debt to a cash component, et cetera, all of those things are part of them, right? We've done a multitude of all those different types of transaction. And oftentimes a transaction will have, quite a few of those involved in the same transaction.
So you guys are very flexible depending on the seller's needs and wants.
That's what the whole deal is derived from. I could give you the best deal under the sun. If it doesn't make sense to you, then it's not a good deal.
And that's what you mean earlier about win-win. It's you got to set it up so it wins in the perspective of the seller. And of course, with your guys' playbook. So lead me a little bit more. What would be a ideal company for you guys? What is it? 1 million in EBITDA, 3 million, and maybe And maybe this leads a phone call coming your way from someone in Florida. But what are you guys looking for? What's an ideal candidate or seller?
So in our world, someone in the southeastern U.S., right? Currently, we have offices in Palm Beach, Tampa, Orlando, Nashville, Atlanta, and Houston. For us, if they're in those markets, great. If they're in an ancillary market close by, that's fine as well. A facilities maintenance-based organization doing anywhere in SDE, seller's discretionary earnings, or EBITDA, north of $500,000 up to, really, there's no limit, but $5 million in EBITDA. That's the space there as far as what the company from a financial perspective looks like. Deal structure, ideally someone that wants to stick around for a little bit. And by a little bit, I mean 3 to 12 months, right? To make a good transition. 1. 2, someone that is willing to do some seller financing. Banks like that. We like that. That simply gives the buyer some reassurance that the seller is putting their best foot forward, that there's no, white elephant in the room, and there's nothing that we're going to find out later that is not true, et cetera, et cetera, et cetera. It's a good faith gesture, 1. And 2, it's a strategic tax tool for the seller. So those 2 things are important. The third one is someone that's got good books. A lot of times, your cousin or your brother's wife, they're not as good as you need them to be, and you can't feel bad for them, because in the long run, it's going to hurt you. You need real tax returns done through a real accounting firm that can carry some weight, that someone can look at and feel comfortable with. So I would say those, in my opinion, are probably the best 3.
Yeah.
Or the most common 3.
And I think we've heard that echoed on this podcast from previous people with acquisition experience. The one that just continues to hit home for me is the good books. And I just talked to someone a couple of weeks ago, and it's, their spouse is doing the books, and you start digging into them, and there's a lot of mistakes being made from a chart of account standpoint, and really basic stuff that if they were set up from a financial consultant just once every 3 months for a couple hours, they'd be light years ahead of where they are. And so if anyone's out there listening, I think once you get over $1 million in revenue, you have to start taking your business seriously. Even if you started it out of the pickup truck with a landscape mower and a couple tools, you've got to start really thinking about, how do you structure this business that is professional, that can withhold look, I'll share an experience. We were audited in 2006, 2007, and 2008 by the IRS. My mom did our tax returns. And let me tell you, they didn't pass the snuff of the IRS, and that was a horrible time to be audited in 2007 and 8. So from experience, I can say this will save you so much heartache, not just if you're looking to sell, but just continue to run your business. Now, I want to step back. I appreciate you guys sharing so much about what you're looking for and where you're headed. I want to talk about the landscape industry and honestly, the entire trades industry as a whole when it comes to acquisitions, because a lot of these deals are being leveraged through debt or other facilities. Interest rates are at potentially an all-time high, at least in the recent past. Yet the acquisition market and M&A market is as strong as it ever has been. So I'd love to get your guys' take a little bit on that. What do you think is driving such a feeding frenzy for the trades industry and specifically landscaping over the last couple of years, and where are we headed? And Jason, maybe you can kick us off here, and then Tony, I'll go to you.
I think number 1 is probably the recurring revenue model that most of the trades industries bring to the table, which is, fantastic. Everybody's looking for it. You don't have per se, although AI will have integration in every business, in my opinion, you don't have that imminent, AI is going to take this over tomorrow, where there are a lot of industries where that's a possibility. So I think that component right there is probably number 1, in my opinion.
Tony, what about yourself? Why do you think there's such a flurry of activity lately?
I think there's a lot of money on the sidelines. There's more money than deals. I think there's a lot of baby boomers that are retiring, that their kids don't want the businesses, and they're stuck with something that gave them a very good lifestyle for 20, 30, 40 years, and now nobody wants it. So there's a lot of opportunity to continue someone's legacy, which is important to them.
Yeah, and finding the right buyer, right, that can continue that legacy and uphold that professionalism. What are you guys seeing out there? I've seen in my market here in California. I'm sure you guys are seeing it in yours. When someone buys another company and they don't do a great job, they don't improve the employee's life, they don't improve the client's life. They kind of, maybe it's part of a bigger process they're going through, and they're not taking the time to pay attention to the details. What are some of those negatives that can happen if you do go into the acquisition mode and you're not doing it right?
I think that the number one thing you'll see there is the lack of employee retention. And employee retention is key. I think across the entire country, at least most of the business owners we speak with tell you that what keeps them up at night, what's their biggest issue, and more often than not, it's seeking qualified employees and then retaining. So I think that's a big, when there's not that clarity and that transparency with the employees of a new acquisition, that could be catastrophic. These people hold the relationships to your customers, all the previous history and do's and don'ts with your specific customers. And that's very important, and that's valuable.
Absolutely. I mean, losing one key employee in one of these smaller businesses, especially if you're in that 500K EBITDA mark, that could be catastrophic to the future of that business.
Absolutely.
For the people you have listening out there, the client that spends the most amount of money with you is not necessarily your best client. 1. 2, never let any one client own more than 20% of your revenue. And make sure that you're passing on your increased costs to clients as quickly as possible. Those are 3 things that are just devastating for small businesses that people can't get their arms around, right? They develop a relationship with a client. They feel bad to raise the price. Hey, listen, my feelings with you are totally irrelevant from my price structure. I've got to do this because my costs have gone up. If you don't, you're out of business. It's very simple. 1, 2, only one client owning more than 20%. Things happen. I mean, companies go out of business. They go in different directions. If one client owns 40% of your revenue and for whatever reason that client is upset or takes the account away from you, you're out of business. I mean, those things are so important. You have to know the numbers. You have to continuously raise prices, and not if it's not necessary, but in these times, it's necessary. I mean, I would see it time and time and time again. Oh, this is my best customer, right? Somebody will tell us. Okay, well, why do you say that? Well, I bill them, $30,000 a month. Okay. So again, why is it your best customer? Well, because I don't bill anybody else that much money. That has nothing to do with it. Oftentimes, you might have a $3,000 client that is really bringing more money to the bottom line than a $30,000 client. And a lot of people can't understand that, right? They don't get that. It is 100%.
How do you measure some of that? How do you measure who is your best client?
Well, you've got to look at your cost of goods, right? Your gross margin. What are you actually putting of your resources into that client on a daily, weekly, monthly basis to produce the $30,000? And oftentimes, if you're honest with yourself and you look at it objectively, for some of these, you're not making any money. Meanwhile, they're the ones bringing you the most. Then you can't stop because it's cash flow, right? So you're like in this weird catch-22 situation that you can get out of, but it's strategic. You got to, chip away at it little by little, increase your smaller client base so that remember, the more you increase the smaller client base, the less that bigger customer becomes of the whole revenue stream. So, I mean, those are just a handful of things that we see that are just like man, the train, you look at people and they're great people, but the train's coming like right at them and they don't see the train. And once it hits you, man, it's hard to get back up.
Yeah, I can think of 2 potential acquisitions off the top of my head that we would have loved to have done. Customer concentration was the only factor there.
So it's big for you guys. I mean, that is a deal breaker when you find this customer concentration in one area.
Well, you can skew away from your 20% ratio for one reason or another within reason, right? But when it's 40, 60%, that person doesn't have a business. They have a big job for them. They can turn that into a business eventually. 40, 60% is not going to work. And we've seen that in some fairly decent sized organizations, that had good structure, good everything, but that, they got tied to this customer and continued growing that customer without growing their other customer base. And they're in a very dangerous predicament.
At some point in this growth process, right, you're going to have more month at the end of the money than you are going to have more money at the end of the month, right? So you're going to need funds, whether it's working capital, whether it's acquisition capital, loans, payroll, yada, 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 yada. It is much easier to work with a bank when your financials are in order from a reputable accounting firm than it is when your mom or your uncle or your cousin does it. I mean, it's like light years difference. It really is. When you go to a financial institution, you say, hey, here's my information. XYZ firm does it. And they maybe know XYZ firm or can reach out to them and it gives them an understanding of who you are as an organization. That means all the difference. Just look in the mirror, like for a lot of people, and ask yourself, would I loan me money? And if the answer is no, why would you expect anybody else to do it? Right? So be the person that you would loan money to. Be the boss that you would like to work for. Be the company that you'd like to bring on as a vendor. If you focus on those things and just try to be what it is you're looking for, I'm not saying it's easy, but it is possible, right? In this country, it is possible.
And it gives you some direction when you ask those questions.
You said you like knowledge a lot, Justin. I mean, one of the things that I related to a lot, talking to small business owners, especially in the trade field, is a half-ton truck. Like, how come none of those trucks are half-ton? Well, they don't hold as much weight. The brakes are smaller. The tires don't last as long. They're not 10-ply tires. Well, they can go on the list there because they've already gone down that route. And they've already experienced that firsthand. Okay, so why are you using your Aunt Susie for your financial reporting and for your accounting? It's the same thing, right? And oftentimes people just need to hear it that way and understand that this is a tool and that you need the right tool for the job.
And at what point, you guys look at so many businesses, that's why I love your perspective on this. At what point in revenue should you really start investing into a professional bookkeeper or accountant? And this, again, like this could be outsourced. This doesn't need to be an employee. Is it 100,000 a year? Is it $1 million a year? Is it 5 million a year? Or should you do it from the beginning?
I think that the answer to that is, number one, it depends what your long-term plans are. Number two is it's pretty soon, because you run into a lot of smaller companies that the owner, if you sit and have a beer with them, have a conversation with them, the guy tells you, well, I got more work than I can handle. I'm not even billing people out. And then they're waiting at nighttime while they're watching a football game to send out bills, and on the weekends, and they can't, if you can't keep up with your billing, you're doing something wrong. That's the lifeblood of your company. Without that, just as important as oxygen, and without that, you're not going to function. So, that happens pretty rapidly when, again, we go back to the beginning of our conversation, when you say what you're going to do, do what you say you're going to do. When you say you're going to do it, you start to get customers and you start to get traction. And oftentimes, these owners, especially at a smaller level, are more hands-on people, and they want to go out and get the work done and what they need. And then they leave the paperwork for last minute, and that doesn't work.
Totally agree. I think it's funny. I talked to a lot of contractors in that boat, and they're almost proud I have an invoice for 2 weeks, because I'm so busy, I have so much work, and they're almost proud of that.
Yeah.
And it's like, dude, what are you talking about? If you take 2 weeks to bill, your clients are going to take 2 months to pay you. So you're training your clients to be slow payers. I want to go back real quick. 20% of revenue or more is an issue. I know people out there are listening to this saying, yeah, but I landed this big client. They're 40% of my revenue. Now what should I do, Tony? What's my next step now that I got this guy who holds 40% of my book?
So your next step, if you know your numbers, is maybe reduce your pricing some if you have to, but increase your smaller clients, right? And have these numbers. I'm not a master in Excel, but some simple spreadsheets can be put together that tell you, hey, if I get $5,000 a month clients, that brings this ABC client from 42% of my total income to 36% of my total income, right? So you have to create this. And again, sometimes you don't know this, and this is where you go to the accountant or you go to the lawyer and ask them, hey, man, I was listening to this podcast, and the three guys seem like they're crazy, but some of the stuff they said made sense. How can you help me get here? You got to ask for help. You got to work towards that. It's not a bad thing that you find yourself in a position where you've got one client that's 50% of your revenue, right? It is a bad thing if you keep it that way, but it's not necessarily a bad thing. Find out, first of all, are you making money on that client? If you are, how much? If those two things check out, then build your business based on other clients to take away the global value of that client as an enterprise, right? Doesn't mean you stop servicing them or you send them a cancellation letter by any means, but you can't let one person own you.
And for God's sake, to bill them on time.
Yeah. If you bill anyone on time, make it that person.
So one thing that I see happen all the time, right, in businesses, and I just can't understand how people do this, right? Here we have Publix grocery stores. I'm not sure if they're in California. I don't think so, but
Nope.
your average grocery store, right? When you go in there, do you take a couple T-bones, some salad and dessert and pay them at the end of the month? I mean, is that, or maybe it is in California. It's not that way here, right? So why in the world would you service the account for a month before you send them a bill? I mean, hey, Mr. Client, listen, man, I'm a small business. I'm going to provide you great service. You're going to be hard pressed to find someone that's going to show up and do a better job than me. But with that service comes an obligation to bill you when we start off the month. I'm okay with you taking 30 days and paying me by the end of the month, and don't pay me until I'm done with that month. But I can't bill you once I'm done because then I'm floating the money for 60 days, right? I mean, that is such a simple thing, and rarely do people do it.
Yeah, it's simple. Bill at the 5th of the month or the month you're going into.
Correct.
And what we've found is a lot of our clients just pay the bill when it comes in. It's just part of their process. And we get the money before the end of the month. And you get, I wouldn't say positive cash flow, but it's almost positive. It's at least neutral. So, what happens in your guys' case? What do you do if a maintenance client hasn't paid you for 3 months? It's a big client and it's a big part of your book, and you're getting behind. A lot of people just heads in the sand. They just keep doing it. Fingers crossed. What's your strategy there?
You can't do that. So every week, each one of our organizations has an AR meeting with leadership and the bookkeeper. That's every week. Hey, this is where, net 30 was last week. This is where it's at this week. 60 days, right? And usually I would say 85% of our clients are between 30 and 60, right? They pay before 30 or between, 30 comes and they pay. Once they get, 60 to 90, you're turning up the heat a little bit. Hey, what's going on? Is there something that we can help you with? Why haven't you paid? Do you have the bills? Are we doing something wrong? Yada, yada, yada. Conversations with the salesperson. Hey, once they go past 90 days, you're getting charged back your commission. There's going to be issues, right? God forbid, which happens. They get to the 90 days, commission gets charged back. We call our collections people, right? Which, inevitably you have a couple of those every year because things happen. but you can't, we're not doing this for practice. I mean, we feel we're pretty good. We're entitled to make a reasonable amount of money and a profit on it, right? I mean, and if it doesn't work, it doesn't work. We part ways. But why in the world would you continue to feed a bad situation?
And especially if they're in a bad spot financially, it's just a matter of time until they pull the plug and send you a cancellation notice in either way.
Absolutely.
So what I take away from that is have a process behind your AR and your collection.
100%. And again, just as much as the accountant is necessary, a real accountant from a real firm for the numbers, as is an attorney or a law firm, right? Oftentimes people think attorneys are just for lawsuits and they're just for like bad things. No, that's not necessarily true. Attorneys are a tool, just like a mower and a hedge trimmer and a blower. I mean, you need them for certain things. In this particular situation, maybe whatever you decide in your business, maybe it's at 90 days or 120 days, there's a letter from the attorney that says, hey, failure to, bring your account up to date, blah, blah, blah. And that same attorney is the one that can, file a judgment, file a lawsuit. If it's an install and you did a notice to owner, they can, hold up the project, et cetera, et cetera, et cetera. You need those people in there. They are allies in your corner. It's like Mike Tyson fighting with no coaches and no trainers, right? Mm-hmm. He may be the best guy under the sun, but you need those tools next to you because they see things coming that you may not, and they focus on certain aspects of the business that you may not be focusing on.
If at all possible, try to have the attorneys you're using and be the ones that generated or created the contract that they're going to defend.
100% created.
That makes life a lot easier. It's difficult for the best attorney around to defend something that you came up with on a napkin, or your cousin came up with, and then you're giving it to them. Hey, I really need this. These people aren't paying me. They're taking advantage of me. Well, this is what he has to work with.
I appreciate you guys sharing this because a lot of what we talk about is all positive growth, this, and that. We rarely get to the darker side of business, but it takes up the majority of our stress. Maybe not the majority of our time, but the majority of our stress goes to dealing with non-paying clients, the lawsuit from so-and-so. And I appreciate you guys sharing the fact that your attorney is so much more than, a reactionary tool. It can be a proactive tool and a consultant at that. And even if you're in the higher market of an attorney charging you $500 to $1,000 an hour, that is well worth it if they're helping to generate contracts, helping to get you some advice and some strategic guidance. And I've noticed sometimes, just Tony, you mentioned the letter with the letterhead of an attorney, that sometimes get kicked up to another level of that company you're billing, and all of a sudden they're like, "Wow, I didn't know we were so past due. Pay these guys immediately."
For those of you that are out there that are doing budgets and dabbling into doing budgets, put these things in the budget, man. This is a part of business. $1,000 a month, $12,000 a year for legal, is not an unreasonable number. Whatever your accountant pays, your bookkeeper, have some bad debt in there. Because again, shit happens. People don't pay. They go belly up. I mean, this is the way it goes. Shame on you for thinking that you would be oblivious to these things. I keep going back to, and this is a personal entrepreneurial thing. If you're listening wherever you are to this podcast, it's because you have a desire to better yourself and do something above and beyond. How bad do you really want it, man? Are you just telling yourself this to check off the box and make your wife shut up because she's pushing you to do more? Or do you really, really want it, man? If you really want it, this is the place. Search until you get there. Don't stop. Don't give up. Again, I said it before. I'll say it again. It's the best country in the world. What's possible here is not possible anywhere else. You never hear of anybody saying, man, if I could only get to Somalia, everything would be okay. I mean, that doesn't happen. It's here. The money's here. The opportunity's here. It's the person that makes the difference. And why not you, right? Why does it have to be somebody else? Why not you?
I love that.
For what it's worth, man, that's as simple as it gets, man. When the student is ready, the teacher appears. It's happened for us. ask for advice. I can't tell you how many times people have come in our path that we ask ourselves, how in the hell did we end up here? And there's just an energy, i.e. you, right?
Yeah.
We
And
go
same to you
to
guys.
this event, we see you speak. I look at Jason. Jason looks at me, and we're like, man, this is a guy we'd like to talk to. And, fast forward 3 weeks, here we are. And I'm looking forward to spending time with you in the future. Why? Because it's mutually beneficial. I'm learning from you. You're learning from us. And we're both pushing each other to better ourselves. That's what these entrepreneurs that you're reaching need to realize. Find people of value. Show me your friends. I'll show you your future. Good things happen within good people. So,
Yeah, and you said it best. It's why not you? I would argue we're in the best time there ever has been in our industry, in the trades industry, to make a seriously large amount of money, and more importantly, a large difference in this industry. And I know that our values are very much aligned, because when we were talking in Orlando, we can make money, right? It's bigger than the money, though. It's more about creating the next generation, the next legacy of this industry, professionalism, just good business, treating your employees well, treating your clients well, treat people how you want to be treated, and maybe go a level beyond that. I think this is, we're kind of starting to get to a great place in the episode. But before I do that, Jason, I want to get your take in general. I mean, building off what Tony said, you guys seem to be self-starters. You got into this industry less than 20 years later, you're doing 35 million. You've got goals to get to 100 million by, in the next 5. What's your message to the folks out there, Jason, that are listening, that are thinking, maybe this is for me. Maybe I can do something with my life and I can go big.
I would say the first thing is to be honest with yourself. If there's somebody that you always need to be honest with, it's yourself. You can't lie to yourself over and over again. And oftentimes we do. If you're not prepared to do certain things, don't expect certain results. That's just the way it is. You can't be upset, to not have achieved things when you didn't give it your all. You didn't try, you didn't search, for the help. You didn't read the books, you didn't listen to the tapes, et cetera, et cetera. That's not a reason to be upset. You didn't do anything. Now if you did everything and you don't get anywhere, which rarely does that happen, because normally when you do everything, you get somewhere. You may have not achieved exactly what you thought you would, but it's gone quite a big run. You have to be honest with yourself and do the things that you need to do to get there. And if you're not willing to do that, then you have to recalculate your expectations and be okay with those results. A lot of people are upset with their results all the time, but they're not putting forth the proper effort.
And if your results don't align with your expectations, that's where real stress and unhappiness starts to.
Absolutely.
So, all right, if you guys listening, or if you're a business in Southeast United States and you're interested in joining with these guys, Jason, Tony, what's the best way for someone to get a hold of the group that you guys run it?
They can reach out to Jason or I directly via email is the best way. My email is antonio@thebatalongroup.com and Jason's is jason@thebatalongroup.com. Reach out. I'd be glad to talk to you, and doesn't mean you're committed to making a transaction, but we can talk.
And I would add to that, and I'll put those email addresses in the show notes. I'll just add, you guys have been very welcoming in Orlando and sharing a lot of your insights and experience. So even if you're out there just wondering what my next step is and you want to talk to someone, this whole thing is all about peer-to-peer relationships and building that network. So even if you're not looking to sell, you're just looking to maybe ask some follow-up questions to some of the stuff I said today, reach out to them. I think that'd be great. All right, guys. Well, hey, it's been a blast having you guys on the show. And I know we can talk for hours about this stuff. We're passionate about it. But we'll end it there. Thank you so much for being on. All right, guys, that's another episode of Trades Talk in the book. Thanks so much for listening to the entire episode. Maggie and I do this as a passion project. So if you have a chance, please hit the subscribe button, share with one friend, and leave us a review. It goes a long way. And if you know any guests that you want to have on the Trades Talk podcast, make sure to reach out, send us a DM on socials, or get in touch with us. All right, guys, have a great rest of your day.